Okay, welcome everybody to this evening's ACY Securities webinar. My name is Duncan Cooper. And tonight's webinar is Forex Trade and Live Market Analysis. So we'll get into that in a moment. Just to give you a heads up what's coming from me this week. Got Market Liquidity, Introduction to Smart Money Concepts Part 1 coming up this Wednesday. So tomorrow at 8 p.m. And we'll be following on next year or in Part 2 and Part 3 on that topic. And then more analysis on Thursday, 21st December, 8 p.m. Sydney time. So with that in mind, let's get into the disclaimer. If you can read through the disclaimer, that would be great. For those in our YouTube live stream, I cannot see the chat, but you're more than welcome to join us in the webinar if you want to talk. For those in the webinar, I've got the webinar chat box and question and answer box open too, so you can utilize either one to talk to me. So I'll just give you time to read through the disclaimer. Of course, we've got Christmas coming up very shortly, so the market is going to start to maybe get a little bit quieter. That being said, the yen pairs have been moving up today, but I suspect Thursday, Friday, especially Friday, we'll start to see a slowdown, and it should be slow next week. All right, we'll move along. If you don't know me, my name is Duncan Cooper. I'm a Senior Market Strategist and Trading Mentor here at ACY Securities, and I'm a full-time trader. I've been trading now for more than 15 years, mentoring for more than 10. If you want to contact me, my email is there, duncan.cooper@acy.com. Through the week, you can connect with us at our website. Go to acy.com, go to Market News tab, or on our YouTube channel, ACY Securities Australia. And if you want to connect with me personally, my Twitter and LinkedIn handles are there. So you can look me up on those. If you want to get access to our Telegram channel, then just contact Nathan.bray. His email's there. I will put it in the chat. If you want to get access to my chart layouts and templates too, then you can contact Nathan. And if you have a question about setting up a demo account or questions about a live account, just contact Nathan too. All right, so that's in the chat there. So let's get into what news items are coming out for the week, or at least over the next couple of days, and then we'll get into the charts. Just make sure this is completely refreshed. All right, so today we have had the Bank of Japan policy statement, and a week or two ago, there was a little bit of a market anticipation that maybe the BOJ were going to change their monetary policy approach, but they've kept everything very much the same today, which has meant that the pairs to yen have been storming upwards. All right, now we've got Canadian CPI, so that's inflation data, CPI month on month, median CPI year on year, and trim CPI year on year coming out. All right, so trading at the Canadian cross in the face of that news item would probably be a little bit dangerous. You want to wait until that item's passed. We've got more inflation data tomorrow for the UK pound CPI year on year, expecting a downtick from 4.6 to 4.3. This Canadian data here expecting a move down. So all data is generally inflationary data at the moment. It's been moving down from countries at the moment as we're heading into a new year. So are we going to get interest rate cuts next year? We'll have to wait and see. Thursday, we've got US CB consumer confidence. Final GDP coming in on Thursday evening. And so all these times are my time, Queensland time, unemployment claims. And Friday, UK retail sales, 5 p.m., 11:30 p.m., Canadian GDP, US core PC price index. And then even into Saturday, as we're heading into Christmas, we still have 1 o'clock in the morning, the US revised UOM consumer sentiment. So there's not a large amount of data coming out, but probably the Canadian data here and the UK CPI data are the main ones to watch. And most people will be starting to, I'm sure, clearing their positions for the holidays, okay? And probably no data coming out next week, but the usual thing is Monday, Tuesday is shut because of the Christmas bank holiday. will open sometime on Wednesday, Thursday, Friday be open, and then it'll be shut until next Tuesday. And then we're kind of getting back into the normality of the market once more. All right. So let's have a look at what's been happening. So we did skip through the 62% level. This is the dollar index. And the major range we've been monitoring is pullback here. This is the weekly chart. We are holding at the 62% level whilst we skipped through it a little bit last week. By the end of the week, we weren't closing below it. We were holding at it. So that is the reference point to watch. Bit of a reversal there on Friday. Small day yesterday. And I will be watching to see if this 62% level is going to hold on the dollar index to move up. All right, from there, if you go to the monthly chart, really the monthly chart is higher top. Are we going to form a higher bottom at the 62% area for a further maybe move up as we're heading into the new year? I know last week we had FOMC statement, interest rate decision from the US, and they were saying that maybe we're going to get 3 interest rate cuts next year, but just a little bit suggestive here on the monthly scale that we're probably maybe holding at the 62 level here. We could be forming a higher bottom at some point. You know, if we have a month up next month, we'll probably be starting to form a higher bottom. So it's worth at least noting the possibility of that. So what is happening at the 62% level is the thing to watch there on the US dollar. S&P 500, it's not quite yet made the all-time high. This is the weekly chart, but it is getting very close. For me, it's not an area to look for a buy because, yes, it's in an uptrend, but it's very overextended. I would probably look for maybe a pullback to an area of broken resistance. So 46.37 over here. You know, looking for a pullback. This is 2, 4, 5, 6, 7. This is, if we have a day up to date, it's the 9th day up. So it needs a correction. It doesn't have to correct before it hits that all-time high, but you always want to look to buy some form of corrected dip, and we don't have one yet. So I'll be waiting for some form of dip. Looking, you know, look for a 1 or 2 day pullback before thinking about buying. So just a question of monitoring that at the moment, being very much aware that you're not that far away from the all-time high. And, you know, currency pairs has been more than proven over the last month to 2 when we're just testing the yearly high on some of the pairs. We then get a sell-off. So I am sure we'll get some reaction up there at 48.16 if we touch it, and it won't be good for the buyers. It'll be better for the sellers. All right, euro dollar, today chart. So we did rush up last week, but if Thursday, total reversal Friday. So the question will be, for myself personally, knowing that the volume is going to probably get a little bit lower this week, my game plan would be to try to trade the outskirts of price action, because if there's not a lot of trades going, you know, if we haven't got maximum volume in the market, it'll be very difficult for the market to be able to move above these highs and hold. So for me at the moment, these highs up here would be the area to watch for a trade, because this is kind of in the middle of nowhere at the moment. We weren't able to take out that top, and I said last week this is a lower bottom. Could we come up, fail at 79% level? Yes, we got higher, but I think an area to watch would be this resistance area at 109.65. That lines up with the major range, 62% level. Here, 109.59. We've got the 79% level there too. So a few areas to watch. What does it do on a move back to the 79% level to that 62% level and the day resistance level? So that's that area there. 109.65 down to 109.53. That would be the first level I would watch. If we don't stall there, I will look at these highs up here, because we probably won't blow straight through those highs in a low volume market if we're starting to quieten down for Christmas. And this could be a double top. It's fractionally short, but it's as good as a double top coming from a lower bottom. So this may just be coming up on the 4-hour chart. And you can monitor this range. 79% level up here at 109.82, or we could come back up and retest 110. So at the moment, trading wise, if you want to drop down to a real low time frame, we are in an uptrend down the 4-hour chart. So you could look for a dip back inside. Just want to go and draw a little fib on the 4-hour chart. So let's just get rid of that fib. That's the most immediate trend. You could be dragging this up and look for a 62 or 79% pullback if you're bullish, this pair. There's a couple of imbalances. We're almost filling this one here, but from Friday, I think it was, there's one over here. So, to get up to the 79% levels as I've been discussing, within the range, price will have to get there. So you don't want to be buying at the top of any move. So you could look for some form of retracement on the 4-hour fib range, which is there. Keep dragging it up if price keeps moving up, and you could monitor for a pullback at the 62 or 79% level. Okay, but just looking a little bit suspicious. That day chart could be a double top up there. So I'm not that fussed about getting long. I'd be looking more about where does this move up to now, and kind of start to see it falter this week. Now Euro Yen's been having a strong move up today. I would now be monitoring this whole decline that we've had. See where we could stop at to put a lower top in. So from a weekly chart perspective, I just want to look at the weekly levels of support or resistance. Put my fib back on. There's a very good high over here, up here, 159.75. This is now a lower bottom. So while we're going to come up to 62 level, 160.05, you've got that weekly top up there at 159.75. Could get up to the 79% level, but that might take a couple of weeks. But at the moment today, it's having a very strong move. So I will be waiting to see where this rally could finish. That weekly trend has turned it down. I said the same thing last week on the dollar yen. I'm looking for a lower top on the dollar yen to form on the weekly chart. Same here on the euro yen. So looking, predominantly in the 62 to 79% zone of the movement down. What happens in this kind of area over the next, this week into next week through the Christmas period. We may not get up there through the Christmas period. It all depends how price wants to do its thing. Price will start to slow down at some point. But I'm already getting myself ready for next year, looking for maybe a lower top forming on these yen pairs, if that's what it wants to do. All right, euro pound. This is how it drawn up last week. We're getting support down here at 85.47, which is monthly support. And up here where we failed at monthly resistance at 87.21. Now, going to the weekly chart, we're coming up from a lower bottom, like I was discussing on the euro yen. So I would look to the 62 to 79% area again for a rollover for a lower top to form. And we have a weekly top over there, just here. We could come up to that level at 87.06. That could be a left shoulder, head, right shoulder. We're coming up from a lower bottom. So that's that weekly top I'm discussing. 87.06 up to the 79% level would be a great area. That's what I said last week. So we do have an uptrend at the moment. As we're dropping down, we do have an uptrend. So to get up to the area, we do, we would have to trade up. So we do have an uptrend on the day chart. So on the 4-hour chart, you could simply monitor for a pullback on the 4-hour structure to the 62 or the 79%. We have moved above 86.09 resistance, so you could watch 86.09 to be supports, but I'd tend to watch the fib retracement area on this pair down there, and keep moving the fib up if price keeps moving up. So we could be seeing some form of, over the next week or two, to move up into this area for maybe that head and shoulder pattern. Okay. All right. Pound dollar. Now, no double top forming here in terms of a pattern, not like what maybe you're seeing on the euro dollar. It is struggling at this area, 127.33, and potentially that could maybe form some form of left shoulder head, but at the moment, quite clearly it's in an uptrend. So, and if we just drag this over, whilst we're holding at the 62% level of this range, there's a smaller day chart uptrend range here at the moment where we're getting support just before the 62. So we could see a fresh high maybe form this week. We'll have to wait and see. One thing worth noting, it all depends what today does. We really struggled at 127 yesterday. So whilst the day chart trend is up, I think the lowest point is just there. We do have a 4-hour downtrend, so we can all see we got support there just before the 62. Yesterday we failed at 127 area. And this 4-hour range here is still in a downtrend. So if we don't take this 4-hour top out today, we could still hold the 4-hour downtrend. So that being said, if we move to a 15-minute, all right, I was looking here to get short yesterday, just a reference point. Now, we're actually just retracing back up within the range of yesterday at the 79% level. So if you're very much bearish, then this area here is a good area to go short, stop above the high. You can see yesterday we couldn't hold at 127, just traded above, and then that's where all the sellers were. So while the sellers going to remain there today. Now, you can wait for a trend line break, which we don't have at the moment, to confirm if we're going to get reversal from that 127 extension at the moment. All right. Another area to watch would be yesterday's high in that 127 extension. Yesterday's chart trend is up, but on the 4-hour scale, it's down, and we could just come up to there and false break and then trade back down. Right, clear there yesterday, 127 was being clearly watched by the sellers. False break, and then it started to trade down. So we may get the same sort of thing going on there. Pound yen. Now, interesting on the monthly scale here, couldn't quite break the low. Fraction short here. The weekly trend is down, the monthly trend is up. So this has been strong all year, the pound yen. So depending on what the pound dollar is going to do, if the pound dollar does move up to a fresh high over the next 2 weeks, this is probably going to end up coming up to the top of the range. And a bit of a bottoming out process going here. And really holding at the 79% level for the last 3 days bar today. So really, that was kind of showing you got support there. And you should have really been looking to trade to the upside. Now that it's moved up, it becomes a little bit more difficult, especially with the reaction today from the Audjpy, is how many more good days will it have up. All right, so structurally, this is a little bit different than the Euro yen. Euro yen, it looks to me a little bit more negative. This looks like it's holding its support here before the monthly low here. So if you're looking for a short, I would probably take some of my lines off here and look at this significant top over here. If you go to the weekly chart, this area up here. So I think at the moment you're looking for a long, but depending on what side of the market you're wanting to play, for sure up here, you could watch for a short. That'll be depending on what's going to happen over the next couple of weeks into the new year. There's a 79% level with that weekly high there. Monthly, I'm inclined to keep with the monthly structure here at the moment, which is just holding to up. You can almost class this as a double bottom. So if you drop it to the 4-hour chart, I think you're really looking for course, this is moving up, but you don't want to be buying it at the top of the move, is look for a retracement. Monitor for a retracement. It's always difficult when we get these news candles, reactions. Well, I never want to be buying at the top. Is look for the monitor the retracement for the next continued move up there. All right. But I would be watching up there at 186.75. It starts to taper out up there into the new year. We could form a lower top. All right, now Aussie yen. It's coming up to an area that I've been watching and discussing. So let me just get these fibs off. We may have a monthly double top up here. All right. The weekly trend, though, couldn't break it down. So as I'm, just basing on the monthly chart here, I can see we held at last year's high. I can also see if the month continues in the same vein, we have a rejection candle. So that could be suggestive that we might be coming up to test 98.43 again. And we weren't able to change the weekly trend here. So we are getting very close now to getting back up to resistance. We're about 40 pips away. And 120 pips away from the high up there. All right, so it is worth monitoring. We had a very significant decline from the test of that monthly high. We could simply be coming up to this 79% level and this significant high here at 97.66. So that's a level to most definitely watch for this strong move up to stop at. All right. With the Bodge not really coming out today and changing their policy, then I wouldn't trade here on first contact because this may just come up and test this high here on the back of the news today. So I would be just standing on the sideline waiting to see what it does up here in this area. All right. I don't want to buy in this area because it's a selling area, but I would have to wait to see if price wants to hold. Opportunities to buy, have already gone. It was down here. It was down in this area if you wanted to get long. All right. So it wouldn't surprise me to see price hit this area today. It's only 34 pips away. But that's an area to watch over the next couple of trading days. What does price do in this area here? 97.54 to 97.66. All right. All right, Aussie. This was an area I was watching yesterday to get short. And we're trying once more. So yesterday we tried to get above last week's high and we couldn't. Yes, we're above it at the moment, but we may not be. It's already proved this week that it's wanting to be held down. What I'm seeing over the last day, this is my 50-minute chart, but buyers are coming in just underneath 67, and last week's high is a high price based on yesterday's price action. Now the day trend is up, and we are, 1, 2, 3, 4, 5 days up here. So we're getting quite extended. The last 3 trading days all have these wicks on them. So yes, we're coming back up to the highs of the last 3 days. If we get another candle with wicks today by the close, I think yesterday it was about this time when I was looking at the market and we were up here. But by the end of the day, we couldn't hold it. And in fact, the major level I'm watching and whether price can get there or not is this 68.05 level from the weekly chart. Monthly chart here, we are lower top, lower bottom. So this is all corrective. And this area in here, there's some weekly highs here that we struggled to hold above through the year, created a double top, but we really were false breaking the 6800, 6805 area. So I'm anticipating if we could get up to there over the next couple of weeks. I'm just watching to see if we can get up to 6805. Strong selling level for the most of last year. All right. 79% level is at 67.64. That is just an area I'm watching at the moment. Now, last 3 days, we're not getting to that area, and we're getting wicks at the top of the candle. So selling pressure is coming in at the highs, but we're still holding that day chart uptrend. But don't forget, the major trend is down from the monthly chart. So somewhere up here, we could well put in a lower top on the monthly scale for another decline. If we take out these highs, then it's going to be different. But if we reject up at 68 up there, assuming we can get there, then that's an area to watch. All right. Azu, hello to you. Now, so, with the way the market potentially going to be slowing down, I'm just waiting for a clear signal to maybe look for an opportunity to sell this pair. But 3 days there with wicks. I'm just going to see what this day, how this day at the moment, if we move back to the 50-minute chart, what does it do? This is where we struggled yesterday. Just been a pip short there at the moment. Is it going to be able to hold above last week's high today and continue to move up? Because if we don't hold at last week's high over the next few 50-minute candles, like see these 50-minute candles here where they were wicky in rejection, and then we move down. As I'm talking, it's rejecting up there. So it's back into the sell zone. And this may just stay for the whole week in this kind of area, testing last week's high, getting a bit of support just underneath 67 as we're heading into Christmas. You can see this whole area here. All right, that's where support is at the moment. And where I've marked at the top, that's where resistance is. So as you're getting into these slower days, heading into Christmas, you need to be able to clearly see for yourself intraday, where is the market getting support? Where is the market getting resistance? Where's the outer limits, the daily highs and lows, okay? All right, New Zealand yen, it's still holding its structure in terms of the higher time frames. The monthly trend is not being able to break down. It keeps selling off. It's getting support on this monthly top, 88.16, and the weekly chart is probably putting in a higher bottom here. So a little bit like the Aussie yen, still holding to maybe putting in a higher bottom of the weekly chart. So this is probably going to come up and test the highs. All right. It's actually touching this high today, that monthly high. No, it's a weekly high just here. So, it's not an area to trade into. You don't want to buy into that top. Should have been buying down here. There was a 79% retracement. We were holding it. All right, so we've had a release up from that area. If you're not already long, it's difficult to be long now because you're starting to trade into this weekly high, and you've got all these highs further up at the top. All right. I would certainly watch this area if we can get there. 91.02 to 91.19. Struggle there before then declining down 340 pips. So that's the sell area at the moment. The buy area was down here. So now waiting for the next area where you could expect a reversal from, which is up there at 91.02 to 91.19, okay? We could hold at that weekly high there, but I think with the Bodge's monetary policy statement today, we may have another day up yet. And if you want to trade this pair to the upside, like I've been saying on the other yen pairs, you'd have to monitor a 4-hour pullback and look to buy a dip. All right. New Zealand dollar, a bit weaker. I was looking up here yesterday for an opportunity to get short. Now, much like the Aussie dollar, last 3 trading days, I've got the wicks on top of the candles. And this is a weekly area over here. Let me just take a couple of these lines off. We've been now, we're actually pretty much closed, very close to monthly resistance. This one here, 6204 yesterday. But we're clearly above it once more at the moment. Again, like the Aussie dollar, it's lower top, lower bottom. This is potentially just corrective, this move up against the monthly trend. And we're head-butting into this weekly resistance level. So this could be left shoulder, head, right shoulder. All right, this is where we could be forming a lower top on the monthly chart here. Yes, the trend is remaining up on the daily. We're getting very wicky on the candles, like we're seeing. We've actually got 4 wicky candles here rather than 3 on the Aussie dollar. So 62.47 is quite clearly expensive. That's that weekly high point there. You had 2 opportunities at the moment to sell it at 62.47, as I was teaching you last week, with a 100 pip stop for a positional play. All right. Yes, this could come up to the 79% level, but if you were selling at 62.47, that's approximately 30 pips further up. It's not going to hit your stop, because your stop's going to be, if you wanted to sell using 100 pip stop, it's going to be up here somewhere. All right. So to 4-hour chart, might have another opportunity if you're wanting to sell at 62.47 today. It's held there twice. Is it going to hold there or move through? You could simply today be watching for this to hit that level, 4-hour rejection candle, trade the break of the rejection candle for a trigger. All right. Is it going to remain holding there today? Let's just get rid of that. 15-minute chart. Probably a 79% retracement of this move. Just a fraction short. So depending on whether we can tag 62.47 today, we could be holding at the 79% level. So what's your setup? All right. Are we failing or failed at 62.47 already? That's the question you need to ask yourself. All right, dollar Canadian. Holding at the weekly low here. So let's go through the monthly. We did actually trade above the monthly high, so potentially we could put in a higher bottom, but is that a double top? Or are we just going to remain range bound? On the weekly chart, we're holding at this weekly low. I might put the weekly low in as a resistance, 133.79. Are we forming a double bottom? What I do know is this is a strong level of weekly support, so we'll probably may well get a reaction at least back up to this little area here where we broke down through. So whilst the day chart trend is down, reversal pattern, okay, we've got railroad tracks there. All we need to do is break the high of yesterday, and that's signaling a reversal at support, potentially signaling a double bottom, for it to at least come back up the range a little bit. And you can monitor, if you were wanting to trade down here for a buy with the break of yesterday's high, this is the range of last week. We could come up to 62.79% level. That will give you ample opportunity to at least get your risk out of the trade, and then you could be holding it to see if this wants to reverse back up to range. All right, we have formed a little mini 4-hour uptrend here. You could, I'm going to break this now down to a very tight entry point. That's the 4-hour uptrend that's just formed. You could be, if you want to get a real good risk reward, tight entry, you could be looking down here at the 79% level, stop below the low. Now, whether or not price will do that, we have to monitor. All right, or you could take the double bottom. If you take the double bottom entry, which is simply a break of yesterday's high, and then put your stop below the low. Of course, that means you're going to risk a little bit more. Going to be risking about 3 pips on that, maybe. It's not a large risk, especially if we're going to come all the way back up the range. But that would be an excellent risk reward, wouldn't it? All right, so the big question is, are we going to hold here to at least move back up within last week's candle? All right. All right, dollar franc, it is below the major monthly low at the moment from over here. Doesn't mean to say just because we're below it, when we're testing monthly levels, major levels, we can be below them, but it doesn't mean to say that we're really long-term committing below them. I get very cautious trying to be a seller below a major level of support like this. All right, so weekly trend is down. So all the time frames are down here. In actual fact, the monthly level 86.99. Once we close below on that candle, these two candles are wicked at the top. So it is actually showing you a little bit of a downtrend, wanting to use 86.99 at the moment as resistance. So if you want to be to the short side, that is the level to watch. Can you sell it against 86.99 to trade down with the trend? Or are you more to the upside and you're waiting for this to false break that area once more and show you an opportunity where you can see price come up and move above 86.99 and that to be support to then move up? So that is the level to watch, 86.99. Are you a buyer or a seller? What do you want the market to do? We are at very historical levels, and as I often will preach, at major historical levels, we will tend to false break and move back up. All right. If we're going to commit well below this level, that has to be the market has to make its decision to make a considerable change in sentiment to this pair, because this at 86.99, that's a historical buying level to trade back up from. All right, so is this pair making a historical shift to the downside? All right, dollar yen. Now this is coming back up at the moment to all my lines on here are weekly lines or monthly lines. 147.68 is a monthly top from way back in time. All my other lines are weekly levels of resistance. So we're coming up to test this level. So there's an area here, 144.43 to 145.06, this area here, where we move below. And we're just trading back within the range of last week. And what this pair's been doing the week before, that was a range of the week before. So 2 weeks ago, that was a range. Last week, we traded up to the 79% level before almost trading down to the 127 extension down here. And then this is the last week's range. So whilst we've had a very, good day up today after the monetary policy statement, 62 level is overlapping with the weekly resistance. And the 62 and the 79% level, either one of those levels would be a good level to look for a trade down from, depending on how price might want to react. It may want to come up and fill the whole imbalance in this candle. So looking at 145.06 to 145.37 would be a much better level to trade from than the one that we're at. 15-minute, but you can monitor both because it might not get to the higher level. Just waiting for a signal that we're changing trend. Do we get a trend line break here on the 15-minute chart or on the 4-hour chart? Do you see a 4-hour rejection candle at either level that would signal maybe a reversal back down? All right, so there's no signal at the moment on the 4-hour or the 15, but we're testing the 62 level with weekly resistance, and then you've got the high level there at 145.06 to 145.37. So we're just coming into a zone where the market could definitely put its high of the week in So we'll have to monitor over the next day or two. Does the move up today continue tomorrow, Wednesday, Thursday, or do we go up today but then start to hold? All right, let's drop into gold, which is getting a little bit quiet now. But really, the question will be over the next few weeks into the new year, are we going to retest this monthly resistance area and move through, or is that significant rejection for a longer term decline? Now, the weekly chart has pulled back to 79%, so holding its uptrend. We have that very horrible rejection though, which makes life difficult in, do we just go by 79% pullback to continue all the way up, or are the sellers going to win a resistance here? Very difficult. The weekly trend is up, so I'll tend to take that bias as long as you can be a buyer at lower levels. And really this level here, 2009, that weekly high there, that will be a great area to watch for price to pull back to and hold. Just where it's sitting right now, for me, is just in the middle of nowhere. Could it pull back to 2009, hold? And can you see a setup to trade up from that level? That will be the clear area to watch through the week at the moment. Of course, over the next 2 weeks through the holiday season, up here would be a clear area to watch. 2070 to 2079, those are the monthly resistance area where the triple tops were. Could price get into there and then hold and reverse? So these would be the two areas that I would watch for buying or selling, okay? And price may just go sideways as we get into the holiday season. So, look to see where the major levels of support and resistance are on anything that you're trading through the holiday period, because that may be where price is going to hold for support or hold for resistance. All right, so you're going to see over the next this week, next week, things are going to quieten down. And you may well find, we may as well stay on this chart and I can just show you, if I was putting in my daily candles, you may well see through the holiday period that price might come up and slightly break the high here, but can't commit. May break, next day may break the low, but can't really commit to the downside. And you end up with days where we're just maybe testing the highs and lows of the day befores. And we stay relatively range bound. All right. So if that's the way the market presents through the next couple of weeks, you have to look at, where's the highs and where are the lows. And if you're wanting to trade, I'm not going to be trading through the holiday period. I just have a holiday like everybody else. I know the market generally will be slow, so I don't worry about the market next week. But if you want to, you need to clearly define where the market's respecting. All right. So, big traders, big institutions, they're all going on holiday through the holiday period. So the volume of the market isn't in the market. So if you've been trading all year, you've had a long year, I've had a long year, I have Christmas off, and I'll just come back in the new year, refreshed, hopefully. A little bit fatter. All right, so those are my thoughts on the market at the moment. Let's just see what the Aussie's doing. All right, so if it starts to hold up there, it may well just stay within the boundaries that are put in there for you on the Aussie yen. It's not up to that 79% area yet. Pound dollar, it's just starting maybe to hold ahead of 127. You can monitor that to see if it starts to reverse. I say yesterday, the 4-hour trend is remaining down at the moment. Yesterday chart trend is up, but sold off last week. 127 at the start of the week is being resistance, and we're just getting a little bit short there at the moment. Just starting to see a little bit of selling pressure just ahead of that level. All right, so you can monitor that. All right, everybody, I'm going to wind it up there. Market's a little bit slow. Make sure you're trading the outskirts if you can. Clearly, you found the outskirts. And in slower markets, it's just a patience game, waiting for the highest probability area, okay, to trade up and down from if you're wanting to trade as we're heading into the slower Christmas period. All right, tomorrow I'm going to be taking you through, if you go to the webinar page, I'm going to be talking about market liquidity. And there's been a number of good opportunities or good examples of market liquidity over the last month or two. Where, if we're discussing market liquidity, you're really looking for a reversal the opposite way. So you have to understand what liquidity is and why you would be looking for a reversal the other way. So I've got some chart examples in the presentation which are old, but then we'll go to the live charts and look at some more recent examples. All right, so that's part one of smart money concepts. And I do use market liquidity in my trading. So I don't use all smart money concepts. Part two is on order blocks, which are fine. I don't necessarily use order blocks in my trading, but it is part of smart money concepts. And then part three is on imbalances, which I most definitely do. So I use kind of part one and part three. I don't really use part two, but if you're a avid smart money concept person, you'll use all three. All right. But I tend to pick and choose from different trading styles, what makes sense to me. And I just use what makes sense to me, what I can clearly see that works. And if there's part of it, if there's a component of it that doesn't make as much sense to me or is harder to use and see for me, I just don't use it. All right, so tomorrow I'm going to be taking you through market liquidity. So if you want to join me, 8 p.m. tomorrow, just register your interest and I'll see you then. Other than everybody, thanks very much. I look forward to seeing you next time.